Okay, so we have began recording this webinar and we can officially begin. Thanks for joining us. So on today's agenda, we're going to start with the introduction of the three-line model, followed by drivers for change, and then we'll talk about the modernization of the three-line model. We'll go on to talk about technology's role in modernizing risk management, integrating cybersecurity into the three lines model, benefits of the modernization model, and future trends in risk management and the three-line model. And then we'll end with a summary of key takeaways and a Q&A session. And I'd like to begin by saying we have a Q&A tab where we welcome all of your questions and we'll discuss them at the end of this webinar. Our expert panelists will either answer them by typing in the answer or we can discuss them at the end. Now I'll go on to introduce our expert panelists. First, I'd like to introduce Zahir Sheikh. He's a partner in Risk Advisory, Internal Audit and Forensic Services at BDO East Africa. He's a dynamic leader with a high public profile and has been a market leader in his chosen markets and services. He was a regional partner responsible for financial advisory services at KPMG in Kenya. He has over 30 years of experience, 7 years in the UK and 24 years of experience here in Kenya. He established the first forensic practice in Kenya in the year 2000 and grew it to a team of 25 full-time forensic specialists. As regional partner of the Forensic Service Business Unit, Zahir has been involved in managing large complex investigations, designing internal controls, proactive fraud management services, training courses, and much more. And next, I'd like to introduce Joseph Mwanzanje. He's a manager in risk advisory, internal audit and forensics here at BDO East Africa. He's an audit assurance, risk management, and internal audit and governance professional with over 7 years demonstrated experience in several industries, including NGOs, FMCG companies, logistics, manufacturing, banks, and financial services. He has a strong track record in managing critical and high-level internal audit and forensic investigations and delivering practical, fit-for-purpose solutions to organizations that enable them to meet their strategic and operational goals. Prior to joining BDO, he worked at RSM East Africa and ESL Group. Our next panelist is Wilkester Sumo. She is a senior in risk advisory, internal audit and forensics here at BDO East Africa. She has over 4 years of professional experience in audit assurance, advisory, business risk and internal audit, risk and compliance, financial accounting, and much more. She has excelled in conducting risk assessments, identifying vulnerabilities, and developing effective mitigation strategies. Prior to joining BDO, Wilkester worked with Allied Associates. She had contributed client risk management by identifying risks, conducting control testing, and implementing integrated process improvement procedures. And next, I'd like to introduce Jacqueline Wanjiru. She's currently a senior in the Internal Audit and Risk Management Department here at BDO East Africa. She has over 4 years of experience in audit assurance, accounting, internal audit, risk advisory, and forensic accounting. And she has been involved in assignments with several multinational organizations. Prior to joining BDO, she worked at Stealth Africa as a forensic associate. As you can see, we have several expert panelists here for us today. And now I'd like to hand it over to the partner Zahir Sheikh to introduce BDO East Africa.
Thanks, Meha, and a very good afternoon, good morning from wherever you're joining us. It's a pleasure to be back here again with a whole bunch of people from our team. I think more and more people are wanting to participate even from our own side in these webinars, and that's a great thing. So to all of you, a very warm welcome. Let me just tell you, mine today is very short because we have so many other people who wanted to present. So, my job is basically just telling you a little bit about BDO and the services. BDO is a global advisory, audit, and tax professional services provider. We're actually the 5th largest globally. And you can see from just our revenue figures last year, 2023, we had revenues in excess of $14 billion US. We have offices in almost all countries worldwide, 166 countries with offices in them. nearly 1,800 offices, and we have 115,000 professional staff worldwide. Next slide, please. So we provide four basically areas of service, core services or core service areas. The first one is audit, where we do our normal statutory audits of financial statements. We also do special audits for special purpose vehicles. We provide audit of donor-funded projects, and then we do special control, internal control audits. We also do lots of training in audit, such as IFRS training. And then we provide other assurance related services as and when required. Our next department is the taxation department. This is again a fully fledged department where we provide tax compliance services, tax advisory services, tax audits, and also health checks, transfer pricing, including international transfer pricing, advice on employment tax, expatriate taxation, corporate international tax planning. And then we also provide advice on indirect taxes, customs duty, and we work with the tax with our clients for cases that even go to tax tribunal where there are disputes, and then we also provide tax opinions. Our next department is our business services and our sourcing department. This is the department which basically provides a whole range of outsourced services. So we do accounting and bookkeeping services for our small clients, those who are not able to have a full dedicated accounting department or don't want to have a dedicated accounting department. We also compile their statutory annual reports. We can prepare and compile their management reporting. We provide financial management agent services. We also provide fiscal management services. We can do your payroll, and we also provide services in relation to IFRS. And then we provide a whole range of company secretarial services, including legal services, and then administration and accounting services. And then the department which I head, which is the advisory services department. So we provide outsourced and co-sourced internal audit and risk management. So for those companies that want to basically completely outsource their internal audit, and typically we've managed to get savings of up to 70% on costs for clients who have outsourced their internal audit services to ourselves. So there's a big cost saving opportunity there for those of you who are considering it. We provide a whole host of management consultancy and financial consultancy services. We provide a whole range of corporate recovery and restructuring services, including resuscitating businesses and also hand-holding those businesses that want to achieve a turnaround. And then we have a fully fledged corporate finance and transaction advisory services division. And in fact, this is one area where BDO is actually a global leader. We do more deals and more transactions than anybody else globally at the moment, annually. And one of the things, if you know about deals, then you'll understand that deals are driven by trust. So we have a proven track record where our people have acted as trusted advisors in multi-billion pound and multi-billion dollar deals globally. And then another department which I directly head is the Forensic Investigations Department, where we look at frauds, corruption, and we deal with large-scale investigations of complex fraud issues, and we take them all the way to court. So I myself will go to court as an expert witness and provide testimony to support our clients in recovering their assets and in recovering any stolen funds. And then we have a technology advisory division, and we also have a business intelligence division, and then we have a whole department on data protection and data privacy, providing those services. Let me just tell you a little bit about BDO in East Africa. I already talked about the global footprint. So in East Africa, we have an East Africa partnership where we have dedicated offices in Kenya, in Uganda, in Tanzania, in Rwanda, and Ethiopia. So when I talk about dedicated offices, we provide all these services in all of those offices. We nearly have 400 staff, professional staff in our East African offices combined. So it's a fairly large complement. And we work seamlessly across East Africa. So we basically share the same platforms, the same methodologies, and we're able to provide a seamless service. So those of you who have businesses which mirror our footprint, we're very well suited to come and provide those services to yourselves. Over to I'll let you start now with the presentation itself, and I'll hand over to my colleague Joseph. Joseph, over to you.
Thank you, Zahir. Good afternoon, good morning, participants. So before we kick off today's presentation, let's take a moment to reflect on our journey so far. In our previous webinars, we have explored the crucial topics such as the understanding the synergy between merging enterprise risk management, internal audit. Under this topic, we uncover the interplay between ERM and internal audit and how together they highlight how aligning these functions can enhance overall risk management strategies. Again, after that, we did the unveiling effective compliance and anti-fraud strategies, where we're together with video expertise or video forensic experts. We delved deep into the strategies to combat compliance challenges and also on how to mitigate the fraud risk effectively. Then we looked at the mastering audit leadership, where we looked into the power of emotional intelligence in internal audit. We examined the indispensable role of emotional intelligence in audit leadership, emphasizing its impact on the team dynamics and stakeholder engagement and overall audit effectiveness. In all of this this series of internal audit risk management, in getting the practical insights for effective governance, today we want us to shift our focus towards the evolution of risk management with spotlight on evolving risk management. The modernization of the three-line model as organizations navigate through increasingly complex environments, it is only imperative to reassess traditional risk management frameworks. And this is where the three-line model comes in. It is a fundamental pillar in risk governance. It is undergoing modernization to adapt to the contemporary challenges and opportunities that come up with the diverse landscape that most organizations operate in. So in this session, we will explore the key components of this modernization model, uncovering the strategies to enhance risk identification, assessment, and mitigation across all lines of defense. And together, we'll gain the insights on how organizations can optimize their risk management practices to proactively address emerging risks and seize all the strategic advantages that come with the modernization of the three line of defense. So without any further ado, I want us to embark on the journey of exploration and discovery as we navigate the evolving landscape of risk management together. So thank you again for joining us, and let's make today's webinar an enriching and interactive session. So let's start with the basics. The three lines model, which was previously known as the three lines of defense, technically is just a structured approach designed to help organizations manage risks and ensure effective governance. So the main goal of the three-line model is just to ensure that internal controls are robust. Secondly, the risks are systematically managed and the organization objectively are achieved efficiently, which again is in line with the general description of the risk management process as a whole. So this model promotes clear delineation of roles and responsibilities within the organization. It fosters a culture where accountability, risk management, and control processes are at the forefront. So the three-line model, it provides the strategies that the risk management process or the risk management as a whole brings into the organization in terms of how to tackle the organization objectives and achieving them through a risk-based approach. So the big question now, because we all know about the three-line model, the question will be, why are we talking about the modernization? So this is because the business landscape is continuously evolving. We can all agree on that one. There are new technologies, there are new emerging risks every day, the changes, regulatory changes, which all of these demand adaptive frameworks that are flexible and are able to counter all of those changes. So the modernized three lines model, it responds to these shifts. It's emphasizing a more flexible, collaborative approach to risk management. So in the next slides, we'll explore the responsibilities of each line of defense. We'll start with the first line of defense, which is the operational management, which is more of the internal controls. We'll look at the second line of defense, with the risk management, compliance, and other forms. And we'll look at the third line of defense, which is just the internal audit and more so the external audit. So while our focus today is predominantly beyond these three lines, it is also important to acknowledge the role of external parties, such as the external auditors and the regulatory bodies. They both play a very vital role in providing additional oversight and ensuring that organization adheres to the external standards and regulatory requirements. So, however, for today our discussion will center on only the three lines that will coordinate and collaborate to create a strong defense against the organizational risks. So if we now delve deeper into the operational framework of risk management within organizations, which is commonly known as the three-line model, I want us to talk about how this model is structured and how it approaches as far as risk management is concerned. So the three-line model is structured approach that differentiates the responsibilities across the three distinct layers within the organization to ensure that there is effective risk management and compliance. So I want us to start with the first line. The first line, which is the operational management. Here I'm talking about the HODs in the departments. The first line of defense is where the rubber meets the road. It's where everything in the organization happens. This line includes the operational management and is directly involved in managing the day-to-day activities of an organization. They are the first to encounter potential risks, and therefore they have the primary responsibility for maintaining the effective internal control and for carrying out the risk management processes. And this is the reason why we normally say that the HODs are the risk owners in the departments, because they're the people who operate day-to-day activities within the organizations. Plus, the operational managers, they're the ones that ensure that activities they oversee are aligned within the organization risk appetite and compliance requirements. So the board come up with the policies. The operational management is the people who implement these policies and procedures and are actively involved in identifying and mitigating risks. That's why we normally say that the departmental risk registers lie under the HODs. So HODs are the ones that have the responsibility in making sure that the risk registers are updated, whether it's monthly, whether it's quarterly or semi-annually. They need to make sure that all the new emerging risks are added into the registers to make sure that they're properly monitored and proper strategies are formulated to mitigate these risks. So in every organization, when we talk about risk, we start with the operational management because they're the one that run the organization. Now, moving on to the second line of defense, we have the risk management and compliance functions. Most organizations, they have the risk management function in their organogram. Other organizations have this role outsourced from a third party, more like the consultants. But either way, whether this role is inside the organization or whether this role is outsourced, they play the same role. So the this layer of the second line of defense, it acts as a support and oversight structure. It helps to ensure that the first line is effectively managing its risks. The second line it develops and implement risk management frameworks and monitor how these are used. This line is the line that will be reviewing the departmental risk registers that are created by the HODs, by the process owners, and making sure that the risks are effectively monitored and the strategies that operational management come with, they work to answer this, to be solutions to these risks. So this layer, they try to provide the specialized knowledge and support, particularly in understanding complex risks and ensuring compliance with laws and regulations. So in this line, the important thing we need to remember that they also help in reporting risks to higher management and ensuring that the organization risks management processes are adequate and effective. So the operation management prepares the departmental risks. Every department has their own risk, and the risk management and compliance function, they prepare what we call the corporate risk register. The corporate risk register just borrows a lot from the departmental risk register, but it provides the corporate overview in general format with even the risk that I imagine that needs to be reported to the board, and so that the board can come up with better measures on how to implement their new policies and procedures. And lastly, we have the third line of defense, which is the internal audit function. Again, most organizations, they have this function internally, or other organizations that outsource this function to third parties. But at the end of the day, they play the same role when it comes to the three-line model. So the internal audit function, it provides independent and objective assurance to the organization board, and senior management. So this line is accesses and reports on the effectiveness of the governance, the risk management that is done by the risk management function and the operation management. It controls, it also assesses the controls established by the first line and second lines, and making sure that they provide assurance on how the governance is and how the internal controls are. So they do this by conducting the audits and reviews. So the internal audit offers the critical insight that help in defining risk management strategies and rectify any lapses in controls or processes. So one of the key elements in internal audit report, we normally have those recommendations. So in every internal audit finding, we'll always have the criteria, we'll always have the effect, the impact, the root cause, the management response, and the recommendations. So internal audit, they help to provide the recommendations to the operational management on how better they can help to strengthen the internal controls and how better they can strengthen the external controls and even the risk management strategies. So yeah, in the three-line model, the internal auditors, they play like they form the back of the process to provide more assurance on the processes. Now that we have understood the basics of the three-line model, we have understood the three components of the three functions, that the roles and responsibilities of the three functions of the organization. I want us to talk about what drove this change. There's that change from the traditional three lines of model to the new lines of model. I want us to talk about what drove this into the modernization of the three-line model. So I want us to talk about the significant updates made by the Institute of Internal Auditors in 2020 and understanding what drove these changes, particularly the shift from the traditional three lines of defense model to the more adaptive three lines model. So this evolution was prompted by a myriad of external and internal factors that reflect our rapidly changing business environment. For example, we have the changes that underscore the changes that underscore the necessity for organizations to adopt more dynamic and adaptable approaches to governance, risk management, and control. So I want us to explore some of the key drivers for this change. I want us to start with the first one, digital transformation. So the rapid pace of digital transformation has dramatically reshaped the business models, operations, and even as far as value chains. So as organizations increasingly rely on digital technologies, new risks and vulnerabilities emerge, including things like cybersecurity threats, data privacy issues, and dependence on digital infrastructure. More so towards the current more organizations are more into the online on the cloud computing or cloud storage. This has necessitated the digital infrastructure transformation. So the traditional models rigidity struggles to keep up with the required agility on the digital first world. It pointed out the need for a risk management framework that can swiftly adapt to digital changes and address this complex technology-driven risks, including things like, especially one of the key risks in technology today is the cybersecurity risk. And so the traditional transformation from where the business is moving on from traditional to more agile frameworks, it drove the change from the three line of defense to three line model. Secondly, I want us to talk about the regulatory changes and compliance complexity. So the regulatory landscape is continuously evolving, marked by increasing scrutiny and regulations across various industries. Compliance has become more complex, necessitating organizations to be nimbler and more proactive in their efforts. A good example, if I take you here to a place near home, Kenya, between January up to April, we have had almost two different changes in how we compute PAYE. Now and how these changes have been brought down by the new changes in the housing levy, the new rates in the new national hospital standard, which replaces NHIF. So these regulatory changes that keep changing to makes the business landscape more nimble and requires people to approach risk management differently from the traditional model, which currently proves to be less effective. Thirdly, the thirdly action is the increasing complexity of risk landscape. So today's risks landscapes are categorized by complexity, interconnectedness, and unpredictability, with risks ranging from global pandemics to climate change, geopolitical tensions, and supply chain disruptions. The multifaceted nature of these challenges means that a siloed approach to risk management is inadequate, and a model that promotes holistic risk assessment and management is crucial. Thus, the change from the three lines of defense to the three-line model. Fourth, I want us to talk about the heightened stakeholder expectations. So over time, stakeholders, including the investors, customers, regulators, and the public, increasingly have been demanding transparency, ethical conduct, and even sustainability. So these expectations are extended beyond the financial performance to include social and economic responsibility. The three lines model encourages an organization culture that values risk awareness and ethical integrity across all levels to meet these expectations. And lastly is the need for a strategic risk management. So there is a growing recognition that risk management should not only focus on protecting assets, but also on identifying opportunities and driving strategic objectives. So this requires a shift from a purely defensive stance to one that balances risk with opportunity, supported by the updated model, which encourages the embedding risk management into things like strategic planning and even decision-making processes. One of the key elements of risk management is the holistic approach, and the traditional three line of defense could not provide this in its approach. That's why it's one of the reasons why it necessitated to the changes into the three line model. So in conclusion, on the wardrobe changes, the shift of the three lines model is a response to the evolving business environment characterized by digital transformation, regulatory complexity, and increasing risk and interconnectedness. It represents a move towards a more flexible, integrated, and strategic approach to governance, risk management, and control, which just aims to better equip organizations to navigate the complexities and the opportunities of the 21st century. And just to add on this, that's why when we do the risk registers nowadays, we normally add the section for the section for opportunities. We now believe that the risk management is not only to identify risks, but also to identify the opportunities that comes with those risks. Now, I want us to take the next 3 minutes. Let's take a 3-minute break and respond to the poll questions on the drivers of change. So here we just want to explore the factors that drove to the evolution of the 3 lines model. I just want us to take 3 minutes. We just respond to the poll. It will be popping up in your screens right now. You can just respond it in the next 3 minutes, and then we can talk about it. So the question is driver for change. The question is which factor do you believe is most influential in driving the evolution of the 3 lines model? Just a single choice. The answers is it because of increasing complexity of the risk landscape? Is it about international organizational conflicts, or none of the above? We still have 2 minutes. Let's fill the poll. Okay, I think we'll be ending the poll in the next 20 seconds. Okay. So let's see the results. Okay. So thank you for your responses. So the correct answer to the question on which factor do you believe is most influential in driving the evolution of the 3 lines model, the correct answer was the increasing complexity of risk landscapes. The increasing complexity of risk landscape is a significant driver for the evolution of the 3 lines model, because traditional risk management frameworks often struggle to keep pace with the rapid changes and in the interconnected risks in modern environments. The 3 lines model emphasizes on the flexibility and more integrated approach among the operational management, risk management, and compliance functions, and the internal audit. So this adaptability allows organizations to better identify, access, and manage emerging risks, ensuring a more resilient and proactive risk management strategy. I will now hand over to Will Kister to delve deeper into this interesting conversation. Welcome, Will Kister.
Thank you, Joseph, and greetings to all. I will now take you through the modernized 3-line model. Initially, the 3-line of defense model was quite structured. It was just about risk prevention, and each line had strict roles. Recognizing these limitations, significant changes were introduced to transform this model into a more flexible, collaborative, and with a principle-based approach. Let's now dig into these changes. The first change is the shift from strict separation of responsibilities to collaboration across 3 lines. Instead of each line focusing on its own responsibilities, everyone is now working closely. For example, risk management teams and internal audit function now work more closely with operational teams to enhance understanding and management of risks. The second change is the emphasis on governance and culture. Previously, there was less emphasis on the roles of the board of directors and senior management. The modernized model has placed a bigger spotlight on governance and culture. It's not just about checkbox anymore. Governance, especially from big players like the board of directors, is key to shaping how an organization handles the risk. The third change is the expanded scope of risk management. In the old model, risk management was mostly about avoiding or mitigating risks. With the modernized model, it's not just about risk anymore. It's just about using them to our strategic advantages. The model encourages taking calculated risks to drive innovation and growth, which means making smarter decisions based on the risks. The fourth change is the enhanced role of internal audit. The internal audit role has gotten a boost. Beyond just checking if an organization is compliant and everything is running smoothly, internal auditors are also advising organizations on how to better the risk management and governance practices. It's about guiding improvements while keeping that independence. In summary, the modernized model is dynamic, integrated, and is adaptable. It's about everyone taking part in making risk and also capitalizing on opportunities. Next slide. Let's now explore how the integration of advanced technologies such as AI, machine learning, and data analytics is transforming the three-line model in risk management. Let's now examine the 3 lines on the enhanced functions. At the operational level, which is the first line, AI and machine learning are instrumental in monitoring and managing risks. These technologies can detect irregularities in transactional data, potentially flagging fraud and compliance issues. The game changer here is the use of real-time data analytics. This technology allows managers to wind off risk as they happen. It makes it easier for them to make informed decisions swiftly. On the second line, which is the risk management and compliance function, the power of data analytics and modeling techniques comes to the fore. It pulls the data from diverse sources, offering a comprehensive view of organization landscape. Then there is the third line, which is the internal audit. Here, the AI and advanced data analytics are the game changer. This technology enables comprehensive data analysis and enhance the sampling techniques. And honestly, they crunch numbers like a boss and bring the new sampling methods to go way beyond the school techniques. While the benefits are significant, the integration of technology in risk management also presents certain challenges. These can be issues related to data privacy and also the demand for skilled personnel like data analysts. How do we tackle this? Well, it's about organizations managing the costs associated with the technology and also keeping technological capabilities up to date. Let's now jog our memory. Mayor will send out a poll. Please spare 2 minutes and respond to it. I believe you can now see the screen. Keep on voting. I can see most of you are voting. Keep on voting. Thirty seconds. Great participation, everyone. It's impressive to see that most of you got the right answer. So the question is, how is technology integrated into the modernized three-line model to enhance risk management? The correct answer is B, to automate manual processes and enhance decision-making. Technology in the modernized three-line model is all about automating the day-to-day operations and boosting our decision-making powers. That's how we stay ahead in risk management with tech on our side. Next slide. In this topic, we'll discuss the critical integration of cybersecurity within the three-line model. It's like a game plan for keeping everything in check when it comes to cybersecurity. Are you aware that cybersecurity threats are intense and ever-evolving danger? So this makes it necessary to implement strong cybersecurity measures. Let's delve into how each line of defense plays a unique role in cybersecurity to ensure comprehensive protection and risk management. The first line, comprising operational managers, they directly manage cybersecurity as part of their daily responsibilities. Think of them as guards at the gate. They implement cybersecurity policies and ensure all employees are aware of and comply with cybersecurity protocols. On the first line, tools such as endpoint protection, secure authentication, and regular software updates are essential, alongside ongoing employee training in cybersecurity awareness. Just curious, have you ever been trained on cybersecurity? If not, I'd like to refer you back to some of our previous webinars on cybersecurity. We've already shared the link, the YouTube. You can pass by and go through the training. Supporting the first line, the second line develops and oversees cybersecurity strategies. It plays a crucial role in identifying cybersecurity risks, conducting risk assessment, and ensuring that risk management controls are effectively implemented. This line utilizes advanced tools like security information and event management system to monitor threats and ensure compliance with relevant cybersecurity frameworks. Moving on to the third line, which is the internal audit. The auditors are all about assessing the effectiveness of cybersecurity measures implemented by the first two lines. They audit the organization's cybersecurity policies and controls, they check for compliance with standards, they conduct penetration tests to identify any vulnerabilities and need addressing. To conclude on this section, integrating cybersecurity into the three-line model isn't just a strategy, it's a necessity for modern organization. Each line of defense plays an important role in safeguarding digital assets, fostering a culture of cybersecurity awareness, and also enhancing overall resilience against potential cyber threats. I will now pass the baton to Jackie to take us through the next slide.
All right. Hi, everyone, and thank you very much, Wilkista. Now, in this section, I will walk you through some of the significant benefits of the modernized model in boosting an organization's capacity in efficiently managing the compliance risk. So one, we have the improved risk assessment and management. This model encourages a more integrated approach to risk assessment and management. It helps organizations proactively identify and manage compliance risks. Enhanced collaboration among an organization's department aids in spotting risks early on, while the advanced risk analytics capabilities allow for thorough risk assessment and considers both the internal and external factors. Secondly, we have the integrated technology and data analytics. Using the current cutting-edge technologies and data analytics, in aiding compliance efforts, we have automated monitoring powered AI and machine learning. Compliance checks become much more efficient. Additionally, analytics give us valuable insight, making it easier to prioritize and allocate resources effectively for our compliance activities. Third, we have the continuous improvement and learning. This model promotes a constant cycle of improvement, which is crucial for staying up to date with changing regulations. By setting up regular feedback loops to learn from compliance incidences and providing ongoing training, it ensures that all staff in your organization are well informed about the current regulations and also the best practices in the compliance. Fourth, we have agility and responsiveness to regulatory changes. This model offers flexibility by empowering organizations to swiftly adjust to regulatory changes. This agility facilitates dynamic updates of policies and speeds up the decision-making processes, which are essential for staying compliant in a constantly evolving regulatory environment. Fifth, we have the enhanced role clarity and responsibility. The model makes it crystal clear who's responsible for what when it comes to compliance processes and ensuring everyone knows their role. It starts with the first line, handling the daily operation, then moves to the second line, which offers insight and guidance, then wraps it up with the third line, the internal audit function, which gives an independent assurance and that the compliance is on track. Sixth, the final benefit, we have the stakeholder confidence and transparency. By implementing this robust compliance framework, we not only increase transparency, but also build trust with key stakeholders, such as your customers, your potential investors. Through regular and transparent reporting on our compliance statuses, we showcase our dedication to uphold high compliance standards, ultimately enhancing the reputation in the process. Now, to summarize this, we've explored 6 key benefits of the modernized model. It's evident that this approach offers a structured yet adaptable framework, greatly enhancing the organization's capacity to navigate and uphold compliance in today's dynamic environment. Okay, now let me take you through the future trends in the risk management and the evolution of the 3-line models. As we navigate a changing and complex global landscape, the current established frameworks, including the model, must also evolve to address the emerging challenges and leverage the new opportunities. So to begin, we are witnessing a significant shift in the integration of advanced technologies, such as AI, machine learning, and big data analytics in risk management. These technologies really step up our game by boosting predictive capabilities and taking care of everyday tasks. This shift will probably push up towards more technology-driven approach. So picture this, the first line, making the quick risk decisions by just using the real-time analytics. The second line, using machine learning to anticipate for future risks. And the third line, streamlining those complex audit processes by just using AI. There has also been a growing focus on non-financial risks. This includes climate change, political risks, reputational risks. This model would demand, this risk, would demand unique strategies and tools, which the model will need to incorporate. This adoption would involve developing risk management and telemaking the strategies that you currently have to now speak to this evolving non-financial risks. Furthermore, we are navigating in an environment of evolving regulations, particularly concerning data protection, cybersecurity, and sustainability reporting. The increasing compliance complexity will require the model to be more flexible and responsive, potentially fostering collaboration between the second and say the third line, making it easier to adapt quickly in case of any regulatory changes. Now, to wrap it up, the future of the model in the risk management will involve a deeper integration of technology, a wider consideration of non-financial risks, better flexibility to regulatory shifts, and a constant approach to handling these risks. These changes are vital to keep the model useful and efficient in guiding organizations through the constant changing risk environments. I will now like to hand it over back to my colleague Joseph, who will now take us through the key takeaways of these webinars. Thank you very much.
Yeah, thank you, Jacqueline. Thank you, Krista. Members will now recap the critical updates to this framework and discuss how these changes are instrumental in enhancing organizational risk management practices. So I want to take us through 3 more sync ideas that we should go home with today after this webinar. So let's begin with the major shift in the modernized three lines model. It emphasizes on the flexibility and collaboration. So unlike the more rigid structure of its predecessor, the updated model promotes integration across organization roles. This adaptability allows each part of the organization to respond more effectively and to specific needs and contexts, enhancing the overall risk management strategies. Next, we have explored the integration of technology. So advances in AI, machine learning, and data analytics are pivotal in transforming the capabilities of the three lines. These technologies enable more proactive and precise processes for identifying, assessing, and managing risks. So by leveraging these tools, organizations can anticipate potential issues more swiftly and make more informed decisions quicker based on real-time data, which at the end of the day, it enhances the timelines and accuracy of the risk management initiatives. So in today's digital world, again, we have talked about the cybersecurity, which we said it's more crucial than ever. The updated three lines model, it integrates robust cybersecurity measures across all the three lines. It ensures that cybersecurity efforts are comprehensive from prevention to active management and response to incidents. So this holistic approach is vital for protecting the digital assets and maintaining trust in an era where cyber threats are increasingly prevalent. The next one I want us to take away with is the regulatory compliance, which remains a cornerstone of risk management. The modernized model supports organizations in navigating complex and dynamic regulatory environments more efficiently and effectively. It clarifies all the roles, improves communication, and it also fosters a more integrated approach. So this setup not only helps in achieving the compliance, but also enhances the organization ability to adapt to regulatory changes swiftly and effectively every time they come on. And lastly, I want us to start looking ahead. The three lines model is expected to continue evolving. So we anticipate increased use of advanced technologies and a greater focus on managing non-financial risks, such as those risks that are related to environmental, social, and governance factors, the ESG factors. This evolution will likely lead to even more comprehensive risk management frameworks that are capable of addressing the changes of tomorrow. So in conclusion of this whole presentation today, as we steer through the complexities of the modern business environment, the evolution of the three lines model is not just necessary, it is inevitable, since it empowers organizations to be more proactive, responsive, and aligned in their risk management practices, paving the way for sustainable success. So I encourage you to think about how these roles manifest with your own organizations and how they might be optimized to better identify your risks and manage them swiftly and more effectively. So for the last row, thank you for your attention for the whole webinar. The last topic in our series of the risk management webinar is the shaping tomorrow's internal auditor. Now we'll be talking about navigating the future of the profession. This one will be in 5th June. Our team will be sharing the invites. I now would like to hand over back to Meha, our moderator, to run through some of the questions in the chat so that we can answer them and then you can conclude today's webinar. Meha, back to you.
Thank you so much. Thank you all for joining us here today. We had a lot of people attend, and we really want to encourage you to attend all of our next webinars. Also, thank you for participating in the polls. We tried to make it more interactive for all of you and just to understand if you guys are understanding what we're trying to say. So thank you so much. And of course, thanks to our panelists, our expert panelists, for designing these slides and also executing this webinar really well. And as you can see, we have a great team at BDO East Africa and internal audit. So we are always available to service any of your internal audit needs. So please do reach out and go onto our website, and you'll find all the contact details you need for any of your internal audit or risk assessment needs. So now we can move on to the questions. So Marcel, thank you for your question. His question was how internal audit can assess gaps in the risk management, especially for microfinance. Joseph, I can hand over that question to you.
Thank you, Meha. So assessing gaps in risk management is a critical function of the internal audit, especially in this context of the microfinance institution, where effective risk management is essential for sustainability operations. So I want us to see how we can assess the gaps. So an internal audit can conduct comprehensive audit. The first thing on how to assess these gaps, they'll do a review of the risk management framework, whereby they can start by reviewing how the risk management policies are, procedures and guidelines, which involves the assessing the adequacy and the effectiveness of the risk identification, assessment, mitigation, and monitoring processes. The next thing again is to do the institution's process review in terms of how they identify and assess risks, especially those that are inherent in its operations. So it might involve reviewing the risk registers, conducting risk workshops, or even interviews with the key stakeholders in the organization, or even analyzing historical data and risk incidents to identify if there's any gaps. Again, internal audit and in their objective function of giving assurance on the process, they can do that by reviewing the risk mitigation strategies. It's checking how effective are these strategies addressing the risks that have been identified by the process owners. So once they review this mitigation, if the mitigation are not effective, the internal auditors will come up with recommendations on how to address these gaps, which is the same thing with monitoring and the reporting processes. Internal audit identifies all these gaps by just doing a comprehensive audit on all the organization processes and procedures. I hope I've answered your question.
Thank you, Joseph, for the very insightful answer. We have another question from Stefan. Stefan has asked, we are an SME in the real estate sector, currently updating our finance manual. As for the old three-line model, we are a lean team, so are all risk owners. No in-house outsourced risk function, outsourced IA function that does biannual assurances. Any recommendations on key areas to sort of boost in the manual in line with the new model?
Thank you, Meha. So based on the fact that you have a lean team in the organization, I think on the finance manual you can focus on clarification of roles and responsibilities. You'll need to clearly define the roles and responsibilities of all the stakeholders in the risk management process, especially when we say that the HODs are the risk owners in an organization. We need to state the roles and responsibilities. Another thing is considering that all team members and organizations are risk owners. So we need to emphasize the importance of individual accountability for identifying, assessing, and mitigating risks within their respective areas of operation. Other thing, you have to develop a robust procedures for identifying and assessing these risks across all the organization. You can just have a procedures on how you identify risks, on how you access them, on how you mitigate them, and on how you report them and communicate. Again, the risk management framework, it's an area that BDO East Africa can help you develop a risk management framework that will effectively address your needs. So technically, if I also help you today, the last thing you have to ensure that since you have already said you have an internal audit function, you need to ensure that you have integrated between these two your risk management processes and the internal audit, so that to ensure that there is a seamless integration between the outsourced internal audit function and the organization risk management process. So you need to clarify the roles and responsibility of the internal audit provider. And when it comes to risk, you have to, when you're to outsource internal auditor, you have to clarify the scope, what they're going to do to you in terms as far as risk management process is concerned. You need to foster a collaboration between the internal audit provider that you currently have and the internal stakeholders to facilitate knowledge sharing and continuous improvement. And then another thing you can do is maybe you can have training and awareness programs that you can invest in training and awareness programs to enhance risk management capabilities across all the organization. Thank you, Meha.
Okay, our panelists have agreed to answer a few more questions. So there's one question asking, are the risk management, compliance, and internal audit the same functions? And how do we differentiate the two?
Hi, Meha. I think this one is related to the other question from Marcel. I can answer them both. Marcel had asked if internal auditors are identifying many issues in the process. Does this mean that the second line of defense is not effective? So I'll answer these questions as one because they're related. So the question on if are the risk management compliance functions, how do we differentiate the two? Risk management, compliance, and internal audit are closely related functions within an organization, but all of the three functions serve distinct yet complementary purposes. They complement each other. So we can differentiate these three functions based on one, you can differentiate them based on their focus. Risk management primarily focuses on identifying and managing risks to achieve organizational objectives. It just identifies risks, assesses them, and manages and sees how they can manage them better as to be in line with the organizational objectives. While the focus of compliance, the compliance function normally ensures adherence to the external and internal rules, including the policies, procedures, and the regulations. Whereas internal audit evaluates the effectiveness of this risk management and compliance processes along with broader governance practices. Another way you can differentiate this one is it's by the objective. Again, risk management, we say it aims to optimize the risk reward trade-off and support decision making based on data, whereas compliance just seeks to ensure that legal and regulatory adherence. An internal audit aims to provide the independent assurance on the effectiveness of the risk management, compliance, and governance processes. So you can differentiate these three functions based on the scope focus and the objectives.
Okay, that's all the time we have for all your questions. We've seen multiple questions coming through. I'd advise you to maybe email the managers or any of the contacts you can get from our website, and we'll be able to answer all of your questions. And once again, thank you so much. I'd also like to announce that we have a new webinar series with BDO India in collaboration with BDO India on ESG. So keep a lookout in your inbox and on our LinkedIn page to get a seat, because it's definitely going to get filled up really fast. So as soon as you see the link for registration, I'd advise you to register. Thank you once again for your time, and also thanks to the panelists for this great webinar. For those of you who have sent a few questions, the panelists have agreed to type in some of the answers. So if you have time to wait, we'll try and answer as many questions as we can by typing them.